This is the Chapter 3 video on personal credit cards, good or bad. Positive financial behaviors versus risky credit behaviors. Being out on your own, as you have probably already found out, can be fun and exciting, but it also means taking on new financial responsibilities. Did you know that there are companies that keep track of whether you pay your debts and if you make payments on time? We're going to explore some of those in this chapter. A bad credit history can haunt you for a long time, 7 years or more. Credit is more than just a plastic card. It's really your financial trustworthiness. Creditors, those are those who lend money or services. And good credit usually translates into lower payments because of the interest. Making payments late or borrowing too much money can get you into trouble. It can cause you trouble in getting a car loan, a credit card, a place to live, and sometimes even a job. Behaviors that help you to be credit worthy are using a budget that we discussed in the previous chapter, and saving regularly like we discussed, and using credit responsibly, which we'll discuss more in detail here. So risky credit behaviors jeopardize good credit. Maxing out, of course, credit cards is one of those risky behaviors. You may be charged a penalty, and it can damage your credit score. Making late payments can also cause you to have risky credit. You should pay your bills on time. If you don't, you may face a major hike in the interest rate. Credit cards love to charge fees whenever and wherever they can. So late payment fees can be charged. Interest, if you do not pay the balance in full, can be charged. And as I've just mentioned, neglecting to pay off your credit card balance each month. If you don't pay your bill in full each month, you will be charged interest on the balance that's left. Good credit or debt versus bad debt. Ideally, your total long-term debt payments, including your mortgage and credit cards, should not exceed 36% of your gross monthly income. That's before taxes, so keep that percentage in mind. The average U.S. household with at least one credit card carries a balance of just under $11,000. There are two types of debt: good debt and bad debt. Bad debt entails putting yourself in financial jeopardy by purchasing items that you don't need and cannot afford. Good debt can be defined as anything you need but can't afford to pay for up front without wiping out cash reserves or liquidating all your investments. So good debt has everything to do with making wise financial decisions. For instance, purchasing a laptop computer for going back to college would be considered a good debt, depending on how much you spent for that computer. If you overbought, then it might not be. Here are some examples of good debt: buying a home, paying for college, paying for a car without jeopardizing other financial goals, or tapping into your emergency fund. Again, if you're overbuying, then that would not be considered good debt. The benefits and dangers of owning a credit card. Some good examples of, say you're 22 years old, you charge $1,000 on a credit card at 19% and you pay the minimum of $20, it would take you 30 years to pay that off, and you will have paid as much interest as the original debt was. So you want to keep those kinds of things in mind and avoid paying minimum payments. Proper management of your credit cards will help you establish a solid credit score. Choose your credit cards carefully. Don't choose a card just because of the freebies that come with it or because there's no annual fee. Expect to pay your balance in full, or if you'll routinely carry a balance on your card from month to month. That will help you make your decision about what kind of credit card to get. Your best bet is a credit card with no annual fee and with rebates or rewards that fit your lifestyle. What that means is that the rewards are something that you actually would be using your credit card for. Carefully review all the terms and conditions. Use them carefully. Keep the debt levels manageable and pay on time. Understand your card's terms. Pay as much as you can to avoid or minimize interest, and pay on time to avoid late fees. Stay below your credit limit. Read all the mailings from your card issuer and check for errors on your credit card bill. Always check for errors on your credit card bill. I cannot stress this enough. Unfortunately, we have lots of fraud in the world, so it's very important that you do check that and call them immediately if you find an error. Guard your credit card numbers from thieves. This includes shredding anything that comes from your credit card company instead of throwing it out. I have seen people cleaning out their car in the car wash and throwing things in a public trash can that should not be thrown there. You want to protect all your numbers. If you're using it online, make sure it's a legitimate website and that it's encrypted, scrambled for security purposes. Most websites that are encrypted have HTTP and an S after it in the web address. Be sure that you understand your right to cancel a credit card. So if they're going to have some changes, they do have to now give you 45 days advance notice and interest rate and fee changes. So you can cancel your credit card, but be aware that you're still required to pay the outstanding balance. And they can increase the amount of monthly payment. Reductions in credit lines can be harmful because your borrowing power becomes diminished. Your credit score is based on what percentage of your credit limit you are using and how much you owe. So you want to be careful if you're applying for a loan, a home loan, to make drastic changes in your credit situation. Decide how you want to handle transactions that would put you over your credit limit. You want to be very cautious about even doing that. Be cautious with no interest offers. These can be a great savings for families if you use them right, especially for furniture stores, electronics, for big ticket items. But you must pay it off during the time that there's no interest. You've got to pay close attention to that, and if it says for 1 year, then you want to have that paid off within 10 months, so there's no question at all about whether you owe that interest. They do charge you that interest, and it can be quite expensive from the time you bought it. Keep only the credit cards you really need, and then periodically use them all. So you don't want to just hold a credit card that you never use around. You need to use it ever so often. Credit cards can tend to cause people to overspend. If you are not a reliable or a responsible credit card user, then you probably should avoid them as much as possible, if always. No existing balance or a very low balance can sometimes reduce your credit score because prospective lenders can conclude that you have the potential to use them and get into debt. So if you have a high credit limit and you don't have much balance on it, that can be very scary to a potential credit lender. Closing a credit card can temporarily lower your credit card score, especially if the canceled card was one you owned and used responsibly for many years. Be realistic about your likely use of the card before you accept an expensive annual fee in return for rewards. Companies cannot increase the interest rate on existing balances except in certain circumstances. They can raise rates on extensions of credit for new purchases, but not for the old purchases. Here's some terms that you want to be familiar with. Annual percentage rate, or APR. This is a measure of the cost of credit expressed as a yearly interest rate. It is required that they all express the interest rate in an APR, so it's more understandable. The grace period is the time between the date of the credit card purchase and the date the company starts charging you interest. Annual fees. Some credit card issuers charge an annual fee. Transaction fees and other charges. Most creditors charge a fee if you don't make a payment on time. They charge a fee for cash advances. Some charge flat fees every month, or if you go beyond the credit limit, they charge a fee. Customer service is something that some people don't consider, but you should know on the back of your card there is usually a 24-hour toll-free telephone number to report fraud and to report any other problems such as lost or stolen cards. They may also offer you options such as discounts, rebates, and special merchandise offers, but be careful of being lured into too many cards by taking those on. Some even offer you free travel points on certain airlines. Again, you want to be careful about accepting offers if you're not going to be using the card, and it'll lower your score. Federal law protects you from owing more than $50 per card if it's stolen, as long as you report it within 2 days. The FICO score is your credit rating. Many times that's what it's referred to. Some different types of credit reports. The first one is an investigative report that says everything about your lifestyle. It's really more of a background check and used mostly for high dollar insurance policies, high level jobs, or security clearance. A standard report is the one that you'll be more familiar with, that just outlines your financial history. It includes your personal information, your payment history, which includes whether you make timely payments, the balance, if it's a joint account, and any negative information, how many times you've paid late, for instance. Public record and inquiries. Anyone who has inquired regarding your credit, such as if you have applied for a new credit card, then that will take a hit on your credit score. The 3 credit bureaus that give us our credit reports are Equifax, Experian, and TransUnion. You can get one free from each of those for every 12 months. It's a good idea to do that. You can also get one free if you've got unusual circumstances such as being denied credit or employment. You can order them by going to annualcreditreport.com or calling that phone number. What is a credit score anyway? I've kind of explained a little bit about it, but it is an analysis of your credit worthiness based on your credit history and current credit accounts. The score usually ranges from 350 to 850. 700 and above is considered excellent. Below 620 may not get you the best interest rates available. So in other words, if your credit score is low and you apply for a car loan, you may not get the loan, or you may have to pay quite a bit more interest. They're going to give you a higher interest rate. Why does it matter? And I just explained that. So what can you do to improve it? Pay your loans and other bills on time. Don't ever pay a company that promises to clean up your credit record for a fee, because they can't do that. Try to minimize how much you owe in relation to your credit limit. If you believe you cannot repay your creditors, don't just ignore it, but contact them, explain the situation, and come up with a payment plan. You can't just ignore it, because they will report you, and that will lower your credit score. There are a number of governing credit card acts that have helped govern us for our own safety. One of them I've already mentioned about the 45 days. They have to give us notice instead of 15, so they've increased that. Equal Credit Opportunity Act, which means that they cannot be biased against us or discriminate against us. The Fair Credit Billing Act, they have to promptly credit your payments and correct mistakes. If they don't, then you will want to make a phone call, but if they continue that, you need to do something in writing. The Fair Credit and Charge Card Disclosure Act, that's why we get so much more mail these days from our credit companies, because they do have to disclose any changes that they make. Collections Practices Act, which means that they have to have someone available outside of hours, or that they cannot call you outside of hours, excuse me. Those that are collecting the debt cannot call you outside of hours, 8 a.m. to 9 p.m. There was recently a situation where someone sued a debt collector because they had harassed them by calling them too many times, and they had evidence of that, and they actually won that case. They have to use uniform methods for computing the cost of credit. That was the Truth in Lending Act, which is where the APR came about, that they all do use the APR, annual percentage rate. And they limit your liability to 50, which I've already talked about. If you're in over your head, of course you need to contact your creditors, as I mentioned. Don't just ignore it. Get credit counseling. Ask about fees from any counselors, and you may even want to check those organizations through the Better Business Bureau for any complaints against them before you use them. The last resort is to declare bankruptcies, because bad credit stays with you for 7 years, but bankruptcies stay on your credit report for 10 years. So you want to avoid doing that. It's sometimes hard to be able to declare bankruptcy. It takes quite a bit of paperwork, and sometimes it could cause you problems in getting jobs. So you want to be careful and use that only as a last resort. And the last part of this chapter, very important, about identity theft. A thief does go through trash. A dishonest clerk makes an extra imprint. You may respond to a mailing or an email, and they may charge your card by doing that. How to prevent it. Before you reveal any personally identifying information, find out how it's going to be used and whether it will be shared. Pay attention to your billing cycles. Make sure that you know when they're going to arrive and get them from the mail quickly. Guard your mail from theft. Put passwords on your credit card, your bank, and phone accounts. Use good passwords that are not going to be easily broken into. Don't give personal information on the phone, through the mail, or over the internet unless you've initiated the contact or you know that person. Protect personal information in your home. You should tear up or shred your documents, receipts, anything with any numbers on it. Find out who has access to your personal information at work and verify that those records are kept in a secure location. Don't ever carry your Social Security card with you. It should be left at home in a secure place. Order your credit report from each of the 3 major agencies every year to make sure that no one has turned you in or that you've had some sort of activity that you weren't aware of on your account. And carry only the identification that you need, which is for most of us our driver's license, because you don't want to have other that can be stolen. If fraud happens to you, you should immediately call the issuer and let them know that this has happened. Report a loss or theft for unauthorized charges within 2 days, and you're only, of course, responsible for $50, as I mentioned earlier. Okay, be sure that you have read this chapter. I think there's a lot of interesting and good information in it that most of us need to know if we haven't already learned it. So let me know if you have any questions. End of this video.